Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. IMF lauds Sri Lanka's progress. President in Davos encourages investments in renewable energy. Exporters suffer as the Red Sea crisis intensifies. In our top story this week, the IMF delegation ended their visit to Sri Lanka. The team, which was in the country since last week, evaluated the country's recent economic trends as well as progress of the ongoing economic reform program endorsed by the IMF. In a meeting with President Ranil Wickremesinghe, Peter Broer, IMF's senior mission chief for Sri Lanka, congratulated Sri Lanka on completing the first review under its program, acknowledging the challenging reforms undertaken. He also stated that higher revenue collections indicates the effectiveness of implemented policies since reaching a staff-level agreement, adding that this boosts confidence among the international community, official creditors and private creditors. This week, President Ranil Wickremesinghe is attending the World Economic Forum in Davos, Switzerland. Convening under the theme Rebuilding Trust, over 2,800 leaders from 120 countries will be attending the event. President Wickremesinghe addressed the forum on Sri Lanka's path to recovery while outlining priorities for trade, investment and growth. Further, at a discussion organized by the Swiss Asian Chamber of Commerce, the President stated that now is the time for investing in Sri Lanka's renewables energy sector. He added that he was confident in the sector's potential to yield benefits for stakeholders and consumers in the coming decades. Sri Lanka exporters are seeing a significant increase in shipment times and freight rates on westbound rates from tensions in the Red Sea. According to Johan Lawrence, Director General of Sri Lanka's Joint Apparel Association Forum, sailing costs to the European Union and the east of the United States have almost doubled, with sailing times increased by about 12 to 14 days. Rates to several European ports have increased by as much as $2,000 to $3,000 per 20-foot container, resulting in doubling of freight costs. He also added that availability of containers are also constrained. Meanwhile, Sri Lanka's Colombo port has seen a significant jump in container volumes in recent weeks as ships seek a convenient transit point away from such Red Sea tensions. According to Lal Veerasinghe, a senior official at Sri Lanka Ports Authority, for ships passing South Africa, Colombo is the easiest port to access. Since the beginning of the Red Sea crisis, the Ports Authority had been handling around 6,000 20-foot equivalent TEUs per day, an increase from the usual 5,000. Credit to the private sector grew for the sixth consecutive month. According to latest data, in November 2023, credit to the private sector grew 62 billion rupees from a month earlier. Such behavior signals the willingness of commercial banks to resume lending with improving economic conditions. Sri Lanka's prime lending rate continued to ease, falling below 12% for the first time in nearly 2 years. According to the central bank, an accelerated credit cycle in 2024 is expected, made possible by the softening rates. The Ceylon Electricity Board has proposed to the Public Utilities Commission a 3.34% reduction in electricity tariffs after it had recorded a profit of 65 billion rupees in 2023. According to Sanjeeva Dhammika, General Secretary of the Electricity Consumers Association, a 30% cut to tariffs is possible given the CEB's high profit status and increased hydropower generation. In our weekly tourism update, tourist arrivals during the first 15 days of January was recorded at 101,362. Average daily arrivals surged to 6,757. The primary source market is Russia, followed by India and the United Kingdom. The SLTDA is targeting 2.3 million visitors for the year 2024. Now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities contracted. Bids amounting to 285 billion rupees were received, of which 95 billion were accepted. The Sri Lankan rupee was steady against the dollar this week, with the central bank's indicative mid-spot rate ranging around 321 to 323 rupees. In other market news, India-based Reliance Industries, telecommunication arm Jio Platforms, expressed interest in procuring a 50.23% stake in Sri Lanka Telecom. Also, Portuguese holding company Petigo Comércio Internacional and Fortune International Investment Holdings have shown interest. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.